Hello everyone, it's the Trade Tiger. First and foremost, I'd like to officially welcome all of you to my trading channel, as this is my first ever video on here. It'd be nice if you subscribe so you can get notifications anytime I post a new video on here. So this particular video was based on demand, as the country has had a lot of unemployment in the past few weeks. It has had a lot of people coming to me asking me how to profitably trade the financial markets from their homes and earn a living that way. That's why I've decided to make this particular video my debut video. So first off, I'll switch to a disclaimer page to inform you that trading is risky and you should understand the risk involved before you venture into it. Here. So I'd like you all to read this and understand the risks involved in trading. But when I say risk, there is always a limit to risk here. I personally believe that everything we do in life is a risk. Leaving your bedroom to work every day is a risk. Everything you do in life is a risk. The moment you realize this, that's the moment you're going to say, okay, I have to take risk to succeed in life. So why don't you just sit at the comforts of your homes and manage your risk well, trading financial markets and making good money weekly. So today I'll show you guys how to profitably trade the crash and bull markets with a very low risk and high reward to earn the living you deserve. Okay, I know some of you here might be new to forex, to trading generally, but I've got you covered. My team got you covered. We have a training academy we started a year ago, and I'd like you to just read what we have on the page now. If you're a newbie, like you don't know anything about forex and you'd like to start making money from the comfort of your homes, I have a $25 training package which would last for 2 weeks. $25 is about 10,000 naira. It will last for 2 weeks. We'll train you rigorously on how to profitably trade the synthetic indices market. This is a lot different from forex because it's a lot more beginner friendly and a lot more better. Like it's a lot more profitable and less riskier. So we're going to give you full binary.com support and you have access to our library of ebooks. Then for the $100 training package, that's about 40,000 naira. It's going to last for 6 weeks and we're going to train you on how to profitably trade both forex and synthetic indices markets. So you also have full binary support, lifetime mentorship from me, access to the VIP hub, which consists of regular webinars, weekly analysis on markets and occasional free signals, and as well access to our library of ebooks. So moving on, I'd like to show you some testimonies from our ex-students that went through our academy last year. So we have some of them here. You can read Riatola. Here she said, my account is now 364. It feels so unreal. I'm happy. I'm going to be an indices trader till I die. So she basically started this account with $76. 76, and she made, that was as at the time she told me, in 3 weeks she made 288. That's about $300, and naira is about 120,000 naira. Anyway, that's just one. Here's another one. Halima, she made over 200 over the night. I'm not showing you to show you that okay, people are making money trading. Like a lot of Nigerians think you can't. There's no legit hustle. Like everything is a scam online. And just this is proof that a lot of young people mostly are making ways and trading the financial markets, making money out of it daily. So here's Eddie. Eddie was a 9 to 5, let me say 5 to 9 worker. So I trained him for 6 weeks. Then that was last year. He decided to quit his job and come on, look at this. He made 675 in a week. 675 is close to 300k, I guess. Close to 300k. So $675, man. Which job in Nigeria is going to pay you that? So that's just it. We have Laddie here. He made about $40. I don't know the time range. Laddie is my friend, so he doubled his accounts and did more than that. I don't know the time range in which he did that, but all of them are students from my academy. So these are some picture examples. We have a lot of them. I'm just going to show you some. If you are not new into trading, you know that these are real accounts and people are actually making money really. So we have this one has a gross profit, and that's the goal of my academy: more profits than losses. Okay, so we have this, we have this, we have this. So if you'll be interested in joining the academy, you can simply contact me on any of the following social media, but it will be better you contact me on WhatsApp because that's where I respond to you faster. So moving on to the main aim of this video: how to profitably trade the boom and crash market. First off, what is the boom and crash market about? So boom and crash are synthetic indices aspects of trading. These markets tick based on simulation, so it's just like giving us an appearance of how stock moves. Technical analysis is only needed to synthetic indices, so this gives us an edge to win always, I tell you bro, because unlike forex, synthetic indices doesn't have any thing to do with fundamentals. That means if any economy is crashing, it doesn't affect synthetic indices, and it's going to be very easy to trade. It's a lot more beginner friendly. The market is open 24/7, 365 days, 365 days a year, so you can trade every day. You can make your money every day. Very low spreads. If you are not new into trading, you understand how spreads really injure people in forex. So very low spread, I tell you, it's as low as 1 pip in some instances. As you're entering your trade with the right prediction, you are entering profits immediately, not that you have to wait. So moving on, this is what the crash market looks like. It has buy candles, little buy candles, then crashes. These crashes are called spikes. This is what the whole concept of crash is about. So buy candles, then crashes, buy candles and crash. Then the bad thing about these crash candles is that they can be stop loss. Okay, they can be stop loss, but it will have to complete this whole candle before it stops your loss. Okay, but I'll teach you how to maneuver the whole stop loss thing and still make money from this market. So this crash happens in 1 second. This crash, just 1 second. Meanwhile, all these ones, this is a 1 minute time frame of crash. All these ones form in 1 minute. All these small. So imagine getting $1. Let's say you enter the trade from here. Imagine, or let's say here. Imagine getting $1 here, $1, $1 or $5. Immediately this is crashing. You're losing like 7, 8, 9, $10. So this is not, it is not advisable you scalp the 1 minute time frame of the crash and bull market. I know a lot of people will be tempted. I tell you from experience, when I started trading this market, I started scalping it. That was last year, early last year. I started scalping the market. It was very, very good for me, but I later realized that it was a waste of time, because when you're losing, it's always very bad. So it's better you swing trade it. When I mean swing trade, you are going to trade it for a long time, probably day to days, depending on where your profit target is. So moving on, this is the boom market, just the opposite of the crash market. It has a lot of sell candles, 1 minute sell candles, then it booms, the 1 second boom, comes down again, 1 second boom. You see how this is the whole concept of the boom market. So we have boom 500 and boom 1000. We also have crash 500 and crash 1000. They have the same structure, the same way of trading, everything. The only difference is that boom 500 is 2 times more volatile than boom 1000, same as crash. The 500 index is more volatile than the 1000 index, in the sense that, okay, if you are earning $1 on one candle on boom 1000, you'll be earning $2 on that same candle, on that same 1 minute candle on boom 500. I hope you understand what I'm saying. But nevertheless, they still have the same higher time frame, like the 15 minutes time frame chart still looks like the normal financial markets. This is what we're talking about. The 1 hour time frame of boom and crash market doesn't look like what it looks on the 1 minute. So it still has the same look it has on the 1 hour, 4 hours, daily, weekly time frame. It still has that same financial feel, that same market feel. So moving on, how to actually trade these markets. We'll just be needing 4 things. Market structure. Market structure simply means supply and demand zones. Supply and demand zones, also known as support and resistance zones. A lot of traders or mentors don't really tell their students how powerful this particular tool is, because everything about trading, everything about markets revolves around the market structure, supply and demand. That means prices will always move around a channel. It will go to the support, get bounced back to the resistance. So it always has that fluctuation. The prices will always move within a channel we call supply and demand zones. So I'll teach you guys how to identify these zones on the higher time frame, because you just need the supply and demand zones on the higher time frame, because they are very, very strong. The higher the time frame, the stronger the supply and the demand zone. So I also have a custom indicator that identifies these zones automatically, but I think it just works with laptops, because I use mine on my laptop. So you can just reach out to me on my WhatsApp and I'll send it to you. Then secondly, we would be using price action, and for the price action we're using strictly inside bar patterns. Inside bar patterns, I'll put you through that. Then we'll talk about sniper entries, then risk to reward. Moving on to the inside bar patterns. What are inside bar patterns? To me, it's like the most powerful tool that the market uses to fool traders. But once you can get a hold of it, you'll be very, 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 very profitable. Mark my words. So, inside bar pattern basically shows you a ranging market, but on a higher time frame in a shorter way. So inside bar always has a preceding bar that engulfs it totally. When I mean engulfs it, it means the high and the low of the inside bar, this is the inside bar, must be in the range of the high and the low of the preceding bar. So this inside bar is totally engulfed by the preceding bar. So once you spot this on the higher time frame, I prefer using the H4 time frame. But first off, I go to my daily time frame, check where price is at, whether it's at the support or resistance zone, check for inside bar patterns. If I see an inside bar that tells me okay, the market is going to sell, if I see an inside bar and it breakouts at the higher time frames telling me the market is going to sell, what do? I go to the lower time frame and check for, by lower time frame I mean H4, H1, M30 sometimes, but I just prefer using H4. I go to the lower time frame and check for inside bar pattern. So now let me just highlight some very important things. Spotting a valid inside bar. For you to spot a valid inside bar, the high and the low must be engulfed in the range of the preceding bar. Look at this now. This tip, the tail of this candle, the high and the low is totally engulfed in the range of the high and low of this green candle rather. So once you spot this, you quickly you just use a horizontal line and draw your high and low levels for the preceding bar. This is also called the mother bar. So once you just spot this, first thing you should do is to put a horizontal line on the range so that you can spot it. So now we're going to be waiting for the breakouts. But first off, I told you the higher the time frame, the stronger the inside bar signal. So me, I particularly use H4 time frame. I've tested it lots and lots of times, and very, very, very very, very accurate. Like, it has a high tendency of always coming through. So now trading the breakouts. So we just wait for, if I spot an inside bar on the H4 time frame, what do? I wait for it to break out of the range of the mother bar, that's the preceding bar. It has to break out, not just break out, so it has to break out and close. It has to break out and close. Why? Because if it should break out and enter the trade, it might be a fake breakout and it will go back into the range, leaving the tail outside. So it has to break out and close out of the range of the mother bar. Hope you understand what I'm saying. So once it breaks out and close, the right thing for you to do is to enter the position, the bias of the market. If it's a buy, if it breaks out below, it's a sell. You enter a sell position immediately after the close and ride it to the next swing high, this next swing low, or next support level. If it's the other way, you buy. If it closes and above this high, you buy and ride it to the next swing high or resistance level. So if it's a sell, you put your stop loss here, just some pips above the preceding bar range, the high of the preceding bar. So you just put your stop loss above here and you'll take profits the next swing low. So now, how to identify fake breakout? Like I said, it will break out but it will close behind, so it will just leave the tail, the wick, outside here. So when are we to trade inside bars? When and where? We trade inside bars at, like, now let me make something clear. I told you how important support and resistance zones are. So if we spot an inside bar at the support zone, what do? wait for a breakout. If the breakout is telling us to buy at the support, we take that trade and ride it to the next resistance. But if it is telling us to sell, you don't take that trade. Why? Because it is at a support, and you're not meant to sell at a support here. That's it. You're not meant to sell at a support. So if you spot an inside bar, be careful at where it happens. So I personally suggest you just take inside bar trades that occur at the daily time frame supply and demand zones. Like, you don't even need to check your H1s, support and resistance zones. Just go to your daily time frame, spot your support and resistance zones there, then wait for price to reach there. Immediately price reaches there, you try and spot your inside bar pattern on the H4, H1, whatever one you like, H30 time frame. So now, when do you trade inside bars? For me, I like to be conservative. So there are two ways to trade inside bar. That's you being aggressive and you being conservative. Aggressive means, look at this now. Let me quickly explain this chart that I drew here. So this is the mother bar here. It totally engulfed the inside bar. So what are we waiting for? For it to break and close above this range. So look at this now. It broke here, but it did not close above this range. Imagine this is the H4 time frame. It did not break above this range. So it came down here and broke here. Being an aggressive trader means you enter from here. Immediately after the close of this candle, you are entering and riding it down to here, putting your stop loss here. But being aggressive won't really give you a nice risk to reward. Look at the risk to reward here. If you enter from here, your take profit will be here and your stop loss will be far above. So this is like a 1-to-1 ratio, which is not too good. It's still a good ratio to me, but we're trying to be very, very conservative so that we don't leave our hearts on the line, because this is the H4 time frame. Like, we are imagining these two candles will be a lot of pips for you to hold. So being conservative means you just wait for the best entries you can get before you enter the markets. That's why I'm going to teach you now the sniper entry that I personally use. So once I spot a break of the range of the inside bar and a close, I wait for a retest into that range again before I take my position. So retest into that range, where exactly am I looking at? I personally look at the Fib retracement from here, the 61. I look at the range between the 61.8 and the 78.6. that means I'm looking at here, this range here, to take my position. 61.8 and 78.6 range of the Fib retracement of this high of the mother bar to the breakout, to the last place where the breakout reached from this high of the mother bar to this last range. Like, this is like the last swing low in case of a bearish market. So I'll take my Fib, drag it from here down to here. My 61.8 will be here, 78.6 will be here. So I'm going to pick my position in between this range. But me, I personally prefer picking it from the 78.6 because that's like super sniper entries. But you can pick it from this 61.8 or even from the space in between them. But most times it doesn't always get to the 78.6. But remember, we're trying to be conservative. If it doesn't get there, you look for other opportunities. The market is open 24/7, 365 days a week. Come on, a year rather. Come on, you don't have to wait for one market to just not play out according to how you plan. So may I pick my entries from this range, the 61.8 to 78.6 space. So I pick it from here. This way it gives me a better risk to reward. Look at this now. As I picked from here, this is going to be my risk to reward, and it looks more like a 4:2, okay, like a 3:1 ratio. So this is better because you're risking less to get more. This is the whole psychology of trading. This is what a lot of traders don't use and get their accounts ruined. Once you have this trading strategy, I bet you look at this now. This is the H4 time frame. If you are picking it from here, on the H4 time frame, you're making close to $30 from here to here. This is the profit range. From here to here, making close to $30 on one market, one of the 4 markets. We have the crash 500, crash 1000, boom 500, boom 1000. We're making close to $30. Imagine with the least lot size, with the 0.1 lot size, that's the least lot size you can use on the crash and boom. Now imagine you multiplying your lot size, increasing your lot size, and taking several positions. Meaning, if you are not using if you open like 5 0.1 lot positions here, you're making 30 times 5, that's like 150. But I tell you, it will be okay for you to just open one position. Me, I prefer to open 2 positions. That's the aggressive one, because sometimes as well it won't come back to retest. It won't come back to the conservative. Means you have to wait for the best entries. So picking it from here will give you a lot of money. Now this is just on one market in just one day, depending on how far your take profit is. Now if you trade this market for a week, you'll be making nothing. With this same strategy, with all I've said today, you'll be making nothing less than $50 a week. Trading it perfectly, putting your stop loss. It's just you having a risk to reward mindset, a good risk to reward, because you don't want to risk more to gain less. You want to risk less to gain more. So that's it. If you're going to have any question, or if you have any question, you can always contact me. So right now we'll be moving to the real charts, and so I could show you live examples on the boom and crash real-time charts. So let's go. So off to the real-time charts now. Before now, I forgot to mention that Binary.com is the official broker, the main broker for the synthetic indices market. So you have to open an account with them. So you can click the registration link in the description box below. There's a link there that will just take you directly to their site, and you follow the instructions and the steps there. So create an account with them so you can get the assets on your phone or laptop, and you can start trading. So now real-time charts, we're trying to spot inside bars. This crash 500, the weekly. Okay, I've spotted one here too. Okay, so now this is an inside bar here. Can you see this? Okay, so after the break of this inside bar here, can you see this red candle? Can you see the inside bar after? And I told you that they trick people, the market players, they know how to trick people into taking the opposite bias of the market. Look at this now. After the inside bar, it showed a bearish pin bar. People want to take a sell position after this, but they're not understanding that it's an inside bar, and it being bearish doesn't count, doesn't really mean it's going to be bearish. So look at this. After the bearish pin bar, look at this rejection. You think there's sell pressure, so it broke out. After it broke out, we're going to see it's going to reach the next resistance level, which is here. You can see that there's a lot of wicks here that show you that there's a strong pressure here. So it broke out, and I told you we're not going to enter immediately. We wait for a retest into the zone. So let's drag my fib from here, from the tip, the low of the mother bar in this case, to the breakout, to the last high made at the breakout, and look at it. This is the 61 point. Let me extend this. This is 61.8 to 78.6 region. So we're going to take our trade from this region. This is the weekly time frame, and this one is for people that have strong capital rather. So we pick it from here and we write it down to the next resistance level, which is here, keeping our stop loss just pips below here. This is a good risk to reward from here to here, down. So that's one example. Let me quickly cancel this. Moving on, let's go and check for other examples on the daily time frame. So daily time frame, okay, this is how to spot the supply and demand zones on daily time frames, on any time frame. Actually, you just look for where there's a rejection of price, an impulsive rejection of price. So look at this, price go here and it pushed it down. So it coming up again means that it wants to retest this zone, but here is already a resistance zone, this place, because there's an impulsive movement of price against that zone. So this is a resistance zone. So we're looking at price coming back here, and we're looking at finding an inside bar at this position here. So I hope we find one. Let's take 8.4. Okay, 8.4. So is there any inside bar? Yeah, there's an inside bar here. Okay, look at this now. Let me draw the range of the inside bar, of the mother bar. So look at this now. When you see this is the mother bar, this is the inside bar, fully engulfed in the mother bar. So after the breakouts, this is going to be a very nice trade, because the take profit is going to be very far, to have a massive risk to reward. So look at this. After the breakouts, some people would have entered aggressively. I told you you should always wait for a retest into the zone. So look at this. We have this, and look at where the retest is. Look at where the retest is. Look at this push from this 786 region. You can see this. So there's a rejection from here between the 786 and 681. So if you take your trade around here, putting your stop loss above the mother bar, this mother bar, putting your stop loss here, putting your stop loss here, with your entry here, your next take profit will be here, around here. So now let's see how. So this is just going to be your next take profit, and look at it comes all the way down and smashes your take profit. On this trade alone, you can make close to $100, just this one trade. because you pick it up from here, you don't really have to hold a lot of loss with our sniper entry method. So you pick it up from here, and don't always forget to break even so you can leave your trade to run for however time you want to run. So this is another example, a good example. So let me clear that up. Let's look for another inside bar. Another inside bar. Let's go to the daily time frame again. Okay, wait, let me quickly show you guys the indicator I told you. Shows us the supply and demand zones automatically. Okay, so custom. So if you guys need this, I'll just text me and I'll send. You can see this. Look at the impulsive push, so it just marks this place as a zone. So if you are going to be needing this indicator to help you highlight these zones faster and easier. So moving on, let's check the boom market now. We're on the crash before. The boom market. Okay, boom market. This is the weekly chart of the boom market. Can I find an inside bar? Okay, yeah, I spotted one here. Look at this now. This is an inside bar. Can you see this? The next one is totally engulfed. So first off, you draw your line. This is the weekly time frame for the people who trade large accounts who can hold trades for weeks, months. So now, after the breakout, some people would have entered aggressively, but you know it's going to take a lot of time because to come back. So we would have waited, and let's see how. Let's say, okay, it got to this high. Can you see this? It got to this high. We're not looking at this because this was the first high it made after it broke out. Okay, look at this. Okay, you first made this high. But it touched the 50. Went back and made this high. Came back down to the 61.8 region between this. So if you had bought this market from here, you would have ridden into the next resistance level, which is here at this point. So if we bought from here with our stop loss here, we would have ridden into this place. So now putting our stop loss here, we are targeting the next resistance level, which is here. Look at where there's a lot of consolidation on this side, so we expect a major reaction here. So this is a resistance level. So putting our stop loss here, entering this trade will be in profits. I told you open 2 positions, or no, I did not tell you open 2 positions. Me, I'm the one who opens 2 positions. So once I take at my TP1 here, I'll close 1 position, then let the rest run. So this one came back down to this zone, then pushed back up, but it did not. Your trade will never be in loss because you sniped it. So look at this, picking it from here is you sniping it. So moving on, let's quickly check the daily for this one and see if you can find anything here. Okay, so let's see. Okay, look at this now. Prices came down, got rejected from this place. So this is a zone, this is a support zone. Prices bounced from here, came back down. So we're looking for an inside bar formation here. This is a support zone. We're looking for an inside bar formation here in this zone. So inside bar formation, let's go to the H4. Go to the H4 inside bar. Okay, so what do we have here? Okay, there's an inside bar. Let's see, that's very good. Look here now, there's an inside bar here. Can you see this? An inside bar formed, faked a breakout, closed back, came down, broke out here. I told you wait for a retest. Now let's take that from the low of this candle to the high where it broke. So now look at it. You pick from the 61.8 to the 78.6 range. 61.8 to the 78.6 range. Look at this. You pick it from here. This is like a sniper entry. This is a sniper entry, literally. So you take it from here. Your TP1 will be here. Look at this. This will be your TP1. You can see that when price go here, rejected back. TP1 will be here. TP2 will be. TP2 will be here. TP2 will be here. TP3, you can extend it to whatever price you want to put it at. So that's based on you taking your take profits according to your greed level. So look at this now. Let me zoom in again. Inside bar, fake breakout, finally broke out the same direction of the fake breakout. So it came back into the zone of the inside bar to the 61.8 to the 70, between the 61.8 and 78.6 level, then push up from there. As a sniper entry, you don't even have to be in loss in any of the trade. So you break even immediately, you are in profits, then let the trade run. Okay, so that's it. If you be needing any further information about this, you can contact me easily on WhatsApp. So bye guys, hope to see you all on my next video.